ETH rises and Bitcoin continues to chop. Why is this happening? You're probably asking yourself. A lot of people are asking what's going on here. Hey guys, it's Keith Allen, and I am back after a long Father's Day weekend. And yesterday I had a live stream with the Bancor crew, Carbon crew, so didn't get another analysis in yesterday. But I'm back today, full with the full Monty here, and we're going to take a look and see if we can figure out what's going on here. Obviously ETH is making some movement. Bitcoin's still chopping sideways. I'm going to try and make some sense of that, and really kind of the basis for what I'm doing right now is, and it's well documented at this point. I tweeted about it the other day, and we discussed it yesterday on Blockchain Banter, and CoinTelegraph even picked up my tweet and put that in a thread a couple days ago. So before I headed out for the Father's Day weekend, I put a trailing stop loss on a trade. And I'm telling you this because I want to be transparent. I had said previously that I probably wouldn't scale out of my Bitcoin position until, unless we broke below 60K. That obviously hasn't happened. However, I did have a trailing stop loss in place to protect profits as I left town for the weekend. And I just wanted to make sure that, I wasn't giving too much back. And when I saw that weakness around 65K, I was concerned that things might go to 60. And I felt like, if we go to 60, chances are we're going to go lower than that because there wasn't a lot of support there at the time. And so on the wick, and I think this happened Monday. And I didn't get home till late on Monday, but I think it happened Monday. We had a wick down to like 64K. My trailing stop loss was at around 64.7 and change or so, something like that. So, still a good profitable trade for me. But now I'm trying to rebuild that position. And I don't look back and go, oh, I wish I hadn't sold, because, listen, profit is profit, and I don't second guess myself. My motives for doing what I did are intact. And so I stand by that. Now I'm just wondering if I'm going to be able to rebuild from a better vantage point than I was at, or if I'm going to be in and rebuild this position that maybe not quite as low as I was hoping to. So we'll see how it comes together for me. But wanted to be transparent about that in case anybody had been listening prior and remembered what my previous statements were. And so here we are with our current price action. And, as we can see, Bitcoin, and I'll go ahead and share a chart here, and I'll explain why I made that move. And we'll also look at ETH, because ETH obviously is making a move as we speak, right? So first things first, we'll head over to the candle chart and take a look at what's happening with Bitcoin. And the thing that I saw that concerned me was this weakness here at the 50-day moving average, right? We had wicked down to that level, and I was pretty happy with the support that we were seeing there early on. But then this was Friday before I left town, we wicked below the 50. And then that's when I really had some concern. There was not a lot of liquidity in the order book at that point, at that level. And so I felt like we could break down further. And of course, it took days for that to develop, but it did indeed happen. And so now we are sitting just below 65K as we speak, right? We're hovering above and below that line. And so wondering, are we going to go down a bit further? Are we going to get into this zone here of prior interest, prior resistance support, actually? And so let's look at history and see what this level is here, right? Obviously, some interesting things in this zone, including our current low, 56.5. That's the wick down to our lowest low. We see the 200-day moving average encroaching up into this level. We have lots of history here. Obviously, a consolidation range, or at least the top of this range here, or a support level, actually, most recently. But historically, if we go back to the 2021 top, we can see that this was really where many seasoned analysts consider to be the market top of that bull run. This was where distribution began. We then had a dump, a pretty significant one, then a distribution rally. And this was really a well choreographed move to pump price back up to a new all-time high. And then the rest is history, right? We dumped from here. But this is largely considered by many analysts to be the real, the bona fide top. And the fact that we have so many closes here up at this level. If I go to the weekly, we'll look at it the weekly and the monthly, right, and see what what kind of confluence we had at this level, right? And you can see a lot of, we had some tops here, and this was in February. We had, back to back tops, at this level. Then we had some bottoms at this level. And so, lots of confluence in this range here. And then, of course, when we got into the distribution, that second distribution to the all time high, we also had some confluence at this level here. So, it's really difficult to pick an exact level and go, hey, price is going to go exactly to $61,034 or $61,563. It's hard to know, which is why it's very common for people to ladder their way in and out of positions. It's a strategy that I've always used and serves me well. Yeah, sometimes you nail it, but not always, right? Sometimes you get front run, sometimes price wicks past you, and so that's a good way to scale in and out. If we look at it on the monthly time frame, we can see as well that those levels that I just mentioned to you also pretty important, right? We have confluence here around 58,900. And then we had this this double top here around 61.3, 61.5-ish level. And then a bottom here around 56.9, right? And that kind of, correlates close enough, anyways, close enough to the pin with where our levels are here. So you see a lot of confluence here now. Really about that 60K level, slightly above 60K. Up to say 61 200-ish in terms of support. And of course, we had a top here also in that range, right? So 61 200 down to 60,500-ish. And of course, we've got some wicks that take it lower and conceivably go all the way down into that 56.5. This is a level that we do not want to see broken because it is a gateway for way more downside, right? Now, if we go back to the weekly time frame, rather, I want to show you something I'm very interested in. Because those daily moving averages got obliterated, I'm now looking to the weeklies, and the weeklies are more important than the dailies, in my opinion, for long-term traders. We have another line of defense here with the 200 way down here, and over time that conceivably gets pulled up higher. But where we sit right now on the weekly time frame, we're close enough to test this 21-week moving average, and that's an important one for me. One of my favorites, as a matter of fact, right? So holding that would be testing it would be solid to me. Holding it would be a really good indication and a really good bullish indication for me. But until that happens, we can conceivably chop here for an extended period of time, right? Until we get that breakout move. Meanwhile, ETH seems to be on the move, right? And I'm sorry for switching gears here so fast. I'm just like, kind of freestyling, if you will. You can see that ETH came down, retested the 618 fib here. This is a macro move, by the way. And it's been struggling. Looked like maybe a potential bull flag building here, and been struggling here. This is the ETH USDT chart. But if we look at it over on, and we're bouncing here from the 50-day moving average today, which is good to see. But what's really interesting, if we go over to the ETH BTC chart, we really see a much more explosive candle here, much more explosive move here, coming through the 10-day and the 21-day moving average, bouncing from the 10 and actually bouncing from the 50, the 10, and now the 21-day moving average that it's trying to hold above now. So this is really a really interesting move, and you can see a pretty solid reversion here on trend precognition, both with the A2 plus algo here with the arrows and the A1 algo here on the dots. We see momentum here with the A1 slope line. That's the orange line here that moves in real time, and it's showing us that we had a reversion here. Boom. Price going up, and even down on the MACD, you see things transitioning and heading towards a flip here. So what triggered that move? Well, in my opinion, and I don't spend a lot of time trading ETH. I do hold a little bit, but I don't trade this very frequently. But some news today I think maybe has a lot to do with this, because we had, it was a few weeks ago that we got an approval on the ETH ETFs, but those haven't made it to market yet. And there's a lot of speculation on how those are going to trade. There's a lot of speculation that it's going to be a, buy the rumor, sell the news event. A lot of speculation that it's going to trade similarly to the Bitcoin ETFs, and there are some similarities, but there's also some big differences in those. And as of today, some interesting news. And incidentally, if you're not, I manage a couple of pages, including my own and the Material Indicators X page, and also Black Knox, which is our parent company. And this is where I share a lot of news. And the big news today on the regulatory and legal front for Ethereum is that the SEC has dropped their case. Now, if you read this article, and I encourage you to read the articles, right? The headlines can be misleading. The headlines can be clickbait. But if you read the article, there's some very, very important information in here that basically says, here we write to provide this notice that we've concluded this is from the SEC, quote from the SEC. We write to provide notice that we've concluded the investigation in the matter of Ethereum 2.0. Based on the information we have as of this date, we do not intend to recommend an enforcement action by the commission against our client, Consensus Software Inc., with respect to this investigation. They go on to say here that in no way should this be construed as indicating that the party has been exonerated or that no action may ultimately result from the staff's investigation. In other words, Gary Gensler likely got taken to the woodshed over this case because they've just approved, how did they just approve an ETF? And they're fighting over jurisdiction potentially with the CFTC. And so maybe this clears the deck for that, that jurisdiction to be defined between the SEC and the CFTC. But also they're leaving the door open to potentially go back and enforce something later down the road. Like, they won't just make a clean break. They won't just say cleanly that, hey, it's done, and we found that there's no issue there. They're just saying, we've chosen not to take any action at this time, and we reserve the right to do so at a later date. Clear as mud. Thank you, SEC, as usual. Anyways, the result seems to be that Ethereum is moving against Bitcoin here in this price action, potentially to get a breakout here, as we have to go back and clear some prior highs, right? But certainly moving in the right direction. And this news pretty timely, considering there's some speculation that those ETFs might actually hit the market here in early July. So that's really just a couple of weeks away. So interesting to see how this develops further. In the meantime, good day for I think the ETH camp and ETH maxis out there. Back to Bitcoin, because, well, I really like the Bitcoin. We go back to Bitcoin and we see some struggling here still to reclaim that 65K level, which personally I'm okay with, because remember, I led this off with, hey, I'm trying to rebuild a position, and to do so, the most advantageous thing that can happen for me is we dip lower. And so I think that, the bull market's still very much intact. Really, as long as we stay above these levels, this would be, this trend line here would just be the absolute last line of defense, in my opinion. Sure, that is a very long way down, and nobody really wants to take that elevator ride. But imagine potentially consolidating for an extended period of time, and at some point in time, this trend line makes its way up here. So depending on when that touch happens, if it happens, depending on where we are on the timeline, I mean, that could conceivably happen. Conceivably, it could happen, all the way up here, right? So at that point, it's not so low. But a test of that support level would just really, in my opinion, if price passes that test, then, and we hold, then that really is the ultimate foundation for the next leg up. It may, that may have already come from here, and we might build from here. But there's always the possibility that we go visit those levels, and of course we have prior consolidation ranges between here and there that could be potential landing zones along the way. And of course, at any point in time, depending on where it happens in time, this may correlate with this here, it may correlate with this down here. You just never know. So I always want to be in tune. I always want to know what the different levels would be in terms of a potential invalidation if if certain conditions are met, right? If this doesn't hold, then we're looking here. And if this doesn't hold, then we're looking down here. And hopefully, there's some sort of confluence between either a moving average or the trend line, um, you know, or right here, right? Maybe it just happens from here, and that would be great, and we would move on. For what it's worth, at the moment, that 21-week moving average is sitting roughly at 63,150. And so, I'd be very happy with the move there. That would be an improvement on where I sold from, and I'd be able to buy back in. I'd be able to buy more at a discount and get back in. I'd be happier if it went to 60. I'd be thrilled if it went, if as long as we stay in the red box, I'm pretty happy. Um, Going below that, I would probably sell some more of what I've accumulated and then, buy back again earlier when we get lower. That's basically what I'm looking at. Now let's take a look over at fire charts and see what this looks like in terms of other liquidity rather. And here we're looking at ETH BTC, and this raises another issue that I've had here over the past several days. We're seeing a lot of spoofing, and it's not uncommon to see spoofing, but we're seeing it from both sides, and we're seeing it. A lot of times we can detect a pattern, sometimes we don't. When we can detect those patterns, it's easy to trade. When we can't detect them, it's a little tougher. And here you can see on ETH BTC where ask liquidity showed up, it was moved lower, stacked heavier, and moved lower, and then it disappeared. It didn't seem to move into a market order. It didn't seem to move lower. It just disappeared. And so I don't know if this correlated potentially with that news coming out or what, but nonetheless, it is it's showing some movement, and you can now see that resistance stacking above 58 here on the ETH BTC chart, and that obviously correlates here. Let's go to the ETH BTC chart, and when I say 58, I'm looking at obviously up here 0.058 sats, if you will. We abbreviate on the fire charts in case you haven't figured that out yet. So now looking over to Bitcoin again, let's look at the Bitcoin fire chart and see what we can notice here in terms of liquidity. And the thing that is really been a little perplexing is, we've seen the support. Yesterday we saw a nice buy wall come in at 60K, and it's quite honestly and literally the largest single level of concentrated bid liquidity that we've seen in quite a long time. Let's zoom out here a little bit and see when the last time we saw this kind of liquidity on the bid side. It's been since May 1st since we've had anything this size in the near bid side range. So that's significant. Still not more than we have on the ask side, but you'll also notice that the ask side is starting to erode a bit. Sure, some of it's coming down lower, but the point of the fact is, as this continues to erode, it will eventually become easier to penetrate. Right? Same situation here. Look, it eroded. We moved back up. It stacked, and then we came back down. We found support. Moved back up. It's stacked, and it's been holding us in this range for quite some time, right? For months at this point. So as they continue to trickle ask liquidity down into the range, that ultimately makes it easier to eventually break this level. In the meantime, seeing bids stack here is a positive sign. So the fact that we've seen this buying happen out of purple and brown to a lesser degree, but price hasn't been moving up. That's been confusing a lot of people, right? So it's really quite simple. there's a for every buyer, there's a seller, and there's somebody on the other side of that trade. Now, the fact that we've seen this buy pressure, but we haven't seen the upward momentum in light of the fact that ask liquidity is very thin here, it would be very easy to move right back up to the 68K level or potentially to the 70K level. But it just doesn't seem to be happening. Why? Well, there are sellers that are, basically uh, floating icebergs in our way to keep us from moving up. What are icebergs? Icebergs are conditional limit orders that appear. We don't see them resting on the order book at this point, but they appear just as price conditions are met for them to appear. So we're not seeing them stacked like we see these big resting orders here and here. But right when price gets to a specified level from that entity, a sell order pops up, and so that is what is holding price in place right now. And even though we have a little bid ladder here, and we have stronger support here, so this is what's keeping us elevated at the moment. My concern here is that we have seen quite a bit of spoofing here over the past week or so. Actually, for the past month, there's been a good amount of it, but the past week it's just been a little weird, right? Here you see some here, you see some down here, and it's happening on both sides, which makes it hard to read. So I'm watching for either things to erode here further, right? It's reasonable to think that these guys want to get filled here. They're close enough to price that they're waiting to get filled, potentially front running 60K here, and it just hasn't happened yet. So I have bids laddered through this range and lower, and hoping that that I'm going to get the break that we're going to get filled down here. The fact that there's very, very little below that, to me, is an indication that there's just not sentiment to go lower at this time. We had seen the other day that there was some bid liquidity moving into place in the 45K range, but even it seems to have, here it is right here. It's faint. Let me brighten it up a little bit. It seems to have disappeared here in the last day or so. So it's moved also. It's moved out. So that tells me that sentiment is well above the 50K level, and largely focused at 60K and higher. You can see the lion's share of it here around that 63, 64K mark. There's about 50 million there, and so watching to see if this holds. Simple as that. And sometimes this is a game of patience, and patience will serve you well. So, as I said yesterday or the day before, I forget. Sometimes you do just have to watch candles develop. It was yesterday on Blockchain Banter. I was saying that I felt like I needed to watch candles develop before I had a clearer picture of what was happening and where we could potentially go from here. Seeing the support here is good, right? Might hold us up above 64K, but I'm prepared to go down here and potentially lower, but 58 to 60 should be solid. As of right now, the liquidity stacking at 60, 62, and here in this, we'll call it, what's this here? 62.5 to 64 has a pretty nice stack of bid liquidity in it. So, hey, maybe we get filled in there and we move on and continue to grind upward. But I really think that until we see alts bottom out, and that seems to be happening now, by the way, alts do seem to be bottoming out because they've taken a hit, but we haven't seen them start to revert yet, right? So I think that we might be in for a longer consolidation period for Bitcoin, and I think that that's healthy as long as it happens, right? So for me, and in my opinion, the longer that we have these consolidation ranges, the longer they are, the stronger they are. And so the longest one we've had in a while has been in this 40 to 45K range. We've had no retest of that level. We had no retest of the 50 to 52K level, and it's just been rocket celery sticks to get us out of this range. We may see that ultimately come up here to get us through that 69 and 71.5 resistance back to all-time high territory. But we've got a lot of work to do to get back above these moving averages and grind our way back in there. And personally, I think it's healthier to see us do that, to grind our way back in, rather than to take a single candle through 3 or 4 levels of resistance and expect it to be sustainable. Obviously, it is sometimes, but the fact that we've had this without any corrections is a little bit scary to me. So that's what I'm watching. You see my areas of interest. It's all happening right here, right now. And as long, and we've got very strong resistance overhead here, as you can see, between these 3 key moving averages, our prior all-time high, our current local resistance around 71.5, and then ultimately the all-time high at 73.8. With that, I'm going to wrap it here, guys. I appreciate the support and the follows, and please keep those comments coming. I love them, and I engage with each and every one of them, and ultimately they help the algo and help me grow the channel. So keep up the good work, keep up the keep those comments coming, and please share these streams if you find them valuable and useful to you. Thanks again, guys. We'll talk again tomorrow.